I am so bullish on gold for the next 2-3 years. We are so far from a top. And there's a lot of reasons I say that. But one reason is even sentiment. Yes, there's a huge crowd here, the biggest crowd that I've ever seen at Cambridge. But these are all people who've been around the gold market for a while, and they're all in. So I'm bullish on silver, but I'm not as bullish on silver as I am on gold, because I think silver has risks. Not only, the huge inflows into the ETFs that you mentioned, retail inflows, but can get skittish. Silver has risks that gold doesn't. I'm bullish on silver over the next 1-2 years, but and it's still, as we know, it is still on a real basis, an inflation-adjusted basis, meaningfully 50% below its all-time high. So it's not the same as gold, but I'm more bullish on gold on a risk-reward basis.
5,000 has come so quickly. And I mean, like you said, we're not that far from 6,000 at this point. So I think that, again, a lot of people are buying into this fear that I think is warranted, but it's really propelling gold ahead of what potentially is going to happen. But I do think there is a breaking point. I think at 10,000, if we're getting to 10,000 in the next few years, things have deteriorated sizably in the U.S. economy and probably the global economy, and maybe even geopolitically, it's even worse than it is now.
Veteran money manager Adrian and technical analyst Gareth Soloway say gold's powerful rally is still in its early stages, with sentiment nowhere near a speculative peak. Speaking amid rising investor interest, both argue gold offers a stronger risk-reward profile than silver over the next 2 to 3 years. Gold's rapid advance toward $5,000, with $6,000 now in sight, reflects mounting economic and geopolitical stress. While silver remains attractive and trades roughly 50% below its inflation-adjusted high, Soloway notes its higher volatility and ETF-driven risks. Day adds that a move toward $10,000 gold would likely coincide with serious deterioration in the U.S. and global economy. Now, we present the clips from theirs interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
6,000 at this point would be, unless something changes, right? And so if we flip back to the gold chart here, at this point, again, if we look at certain trend lines, right, and I'm a trend line trader, is that you really don't have anything, right? We've gone through this level here. We've pushed through that. We had a parallel here of support, which kind of mirrored this right here. And we've now blown through. And so this is the thing, is when you get in price discovery, sometimes as a technician, you just have to step back and say, hey, listen, it'll go until it stalls. And once more sellers come out of the woodwork or something occurs, then it will have its dump. And then I can start trading it again based on technicals. But right now, the technicals are out the window. I mean, I would explain it like if they understood what a meme coin was, I would explain silver, not gold, but silver right now is more of a meme. You have the same verbiage as it'll never come down. It's a new paradigm or all of these kind of same things that are going on. And we can flip over to the silver chart to take a look. Silver had a good day today, but gold, interestingly enough, is the one that made a new all-time high. Silver did not quite make a new all-time high and still has a topping tail in the daily chart here. And this is a technical reversal that we saw a couple days ago on silver, that until we have a daily close above it, that is now in stone as a top signal for silver. And again, it could be negated tomorrow. I'll be watching, but at least in this situation, and it is so similar, the same way, if I ever say anything negative on silver, the attacks on YouTube, they are massive, just like if I ever back in 2021 said something about Dogecoin, if I ever spoke against that, it was the same sort of psychological impact and reversal. I do think we're there, at least on silver. Gold is obviously harder to pinpoint, and I'm a big holder of long-term gold. I've been a big holder for years. In fact, I think a couple years ago it was my top pick with you on your show at the end of the year for performance back. I think it was 2022 or 2023. But ultimately, again, the excitement around it has made it an overcrowded trade. A lot of what we call in the trading world is the weak hands. The weak hands are the ones that buy in late and then they expect to get rich quick. And again, you compare that to those of us that have held gold since 2015 or 2010 or 2019, where we were just like sitting there watching everything else go up. And we're like, but we really understand the financial reason for holding gold here. And now we're getting the payout, right? But those players that buy late that are doing it to get rich, those will be the ones that get flushed out. The rest will it'll then start to head back higher and probably make new all-time highs. I still think it's going to 10,000. The question is in what year? Now, the bigger question is where, right? I would have thought it would have been this Pierce of $5,000 per ounce. We have not seen that yet. Now, what we can do is go to the logarithmic chart and start to take a look here and see. So I flipped it to the logarithmic chart and we go back here. And what we do is if we flip over to a larger time frame, we start to notice that, again, you had this incredible move in the 1970s into 1980, this long base, another incredible move here, and a consolidation base that was shorter. And by the way, think about this. So, and this is just a little side note, but it's fascinating. Look at how long the consolidation base was here, and look at how long the consolidation base was here. Much shorter in the 2010 to 20 range. Now, why? Ask yourself why. Because here, this is where we actually had fiscal responsibility. We actually had a balanced budget at one point. Here, no balanced budget. And the problem is these down cycles in gold, if we continue on this trajectory, are going to get shorter and shorter. So wherever gold tops, and I'm not going to pretend I know at this point, it's going to be a much shorter bear period or consolidation period unless the fiscal restraint is restored. And that's really the key crux here, folks. I mean, it just comes down to people rushing to diversify to protect themselves. They're buying insurance on a sinking ship. We see the ship sinking. We've got to buy insurance. My guess is, and it's hard to know the top, but my guess is when we look at the reversion here, and let's take it off the logarithmic chart, is what we'll start to see is a retrace to a reasonable pullback level. Like right here, we could see on the move up, this is where we stalled out, which means when we do correct, this 4,300 likely becomes your next base point, right? That's where you're going to hold on to the major gains most likely and potentially turn up unless we see that fiscal responsibility built in. Now, David, you remember I think it was 2013 or 2012, the countries like Italy, Greece, remember the market eventually imposes austerity by certain means. And I do think the U.S. is going to face that within multiple years, maybe within 3 years. The markets themselves will start to impose austerity regardless of whether our political players do.
Technical analyst Gareth Soloway says gold has entered full price discovery, rendering traditional trend lines ineffective as the metal accelerates beyond prior resistance. With gold making new all-time highs and $6,000 increasingly plausible, Soloway notes that technicians must step aside until sellers emerge. Silver, by contrast, shows signs of a short-term topping pattern, driven by meme-like sentiment and aggressive retail enthusiasm. Soloway warns that weak hands chasing late-stage gains may be flushed out during corrections. Long-term, however, he remains bullish, projecting $10,000 gold as global fiscal discipline erodes and markets eventually impose austerity, potentially using $4,300 as a future base during pullbacks. Let's get back to the interview.
So I'm bullish on silver, but I'm not as bullish on silver as I am on gold because I think silver has risks, not only, the huge inflows into the ETFs that you mentioned, retail inflows, but can get skittish. Silver has risks that gold doesn't. The drivers of gold for the last 3 years, central banks to diversify their assets away from the dollar, Tether, now in the last two reporting quarters, buying more gold than any central bank. These people are not buying silver, right? Silver is a different market. So I'm bullish on silver over the next 1-2 years, but and it's still, as we know, it is still on a real basis, an inflation-adjusted basis, meaningfully 150% below its all-time high. So it's not the same as gold, but I'm more bullish on gold on a risk-reward basis. Well, there's two reasons. One is silver's a more retail audience, and so these people look at physical as well as miners. For central banks, however bullish they are on gold, they're not buying Newmont or Barrick, let alone Ajax Exploration. They're just not doing it. Whereas the people buying silver are looking at stocks. That's one thing. The other thing, of course, as we all know, is there are just far, far fewer silver companies than there are gold companies. And even some of those with silver in their name, dirty little secret.
They don't have much.
But I mean, you look at Pan American, which I like. So I'll mention it as an example because I like it. We own a lot of it. I like it. I like management and everything else.
On, so that's
okay,
good.
yeah. But, you know, it's Pan American silver. And like last year, before they bought MAG, 22% of their revenue was silver, you know. But it's got silver in the name. So when silver moves, people look for silver name. I am so bullish on gold for the next 2-3 years. We are so far from a top. And there's a lot of reasons I say that. But one reason is even sentiment. Yes, there's a huge crowd here, the biggest crowd that I've ever seen at Cambridge.
Yeah.
But these are all people who've been around the gold market for a while, and they're all in. Generalists are simply not in this market.
Yeah.
And in fact, the GDX, for example, the largest gold mining ETF, they had net withdrawals over the past 4 weeks.
Yeah.
Net withdrawals. So this is not a mania. The generalist investor simply isn't in this market yet.
Market strategists say they remain bullish on silver over the next 1 to 2 years, but gold presents a stronger risk-reward profile. Silver carries unique risks tied to skittish retail participation and heavy ETF inflows, while gold's rally is driven by central bank diversification away from the US dollar and recent large-scale purchases by Tether, which has reportedly bought more gold than any single central bank in recent quarters. On an inflation-adjusted basis, silver still trades 50% below its all-time high, yet lacks institutional sponsorship. Analysts note that generalist investors remain absent, with the GDX Gold Miners ETF seeing net outflows, signaling the gold bull market is far from a speculative top. Share your thoughts on his analysis in the comments section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos.